I want to share with you a realistic analysis of where we are starting with Bitcoin. Bitcoin exchange balance has hit a 3-year low, meaning more and more Bitcoin are being taken off exchanges. Here is the data as of about 2 days ago. The orange represents the Bitcoin balance on exchanges, all exchanges, and the gray represents price. This is from January of 2018 all the way to where we are today at the end of 2021. And as we know, it was during that pandemic crash of 2020 where the Bitcoin accumulation started. After this crash, price started to go up as balance on exchanges started to go down. So by all means, this is a bullish indicator. And I know what you're saying. You're saying, Austin, I don't get it. If Bitcoin continues to leave exchanges, how come the price is dipping? How come the price wouldn't increase? Well, first off, this is just one indicator of many. And second off, it's not that direct. What I would pay attention to is more of the broader trend. For example, starting in 2018, as Bitcoin continued to enter exchanges, go on to exchanges, the Bitcoin price dropped / traded sideways. The minute Bitcoin started leaving exchanges, not every day, there was dips and falls and everything, as the Bitcoin price continued to trend up. And the trend is usually your friend. And next up, second metric out of the 5 metrics we're going to look at today is Bitcoin's net transfer volume from and to exchanges. And what we're going to do is compare where we are today to where we were in May with that 50% correction and see how similar or different this current correction is. When looking at the net daily transfer volume on exchanges with a 30-day moving average applied, it can be seen how different this recent sell-off and subsequent derivatives market liquidation was compared to this one seen in April/May. And here's how it's different. During the May sell-off, around 5,149 Bitcoin were deposited on exchanges per day on average during the peak of the sell-off. Comparatively, today, only 1,178 Bitcoin have been withdrawn from exchanges per day on average over the last month. So this is a difference of night and day in the sense that in May, we saw peak deposits onto exchanges, as opposed to today, we're seeing net outflows from exchanges. Another bullish indicator. Next up, let's go off-chain and look at what's happening in the derivatives markets. Because the event that caused this crash was not a natural sell-off, but massive liquidations in the derivatives market. So looking at where we are today, perpetual futures dominance is at its lowest since May. Could you explain what this indicates? It indicates that the market right now is more spot-driven currently. This metric serves as a proxy to see how driven the market is by spot, which is actual organic buying. After last Friday's flush, we reset to the lowest value since May, meaning the market is the most spot-driven it has been since May. Give me your general take on this down below. Comment your thoughts right now down below. But moving forward, I just want to apologize to you right now. I'm sorry. Some of you would prefer that I only show bullish charts, that I keep the bearish charts to myself. But that's not how the market works. There's always going to be a mix of bull and bear, and on this channel, you can always come to get the full picture. I'll bring you all the information. I'm always going to keep it real with you guys. We've spent almost a week now below short-term hodler cost basis. So what the short-term holders are doing. Still not a bull on this market until a $53,000 Bitcoin is reclaimed. I'm not a giga bear, just cautious until shown otherwise. Bear confirmation would be a failed underside retest. So even though we do have data, as seen here, that long-term holders are still accumulating, they're still buying Bitcoin, short-term holders are shook based on the on-chain cost basis analysis. So what this means to me is that while me personally, I'm still bullish long-term, I guess there's really no rush or fear of missing out of us going full bull anytime soon. I will keep my eye on these metrics, and if/when we get an update on these metrics, I will keep you updated. Next up, let's talk about the top altcoins making news, starting with Ethereum. White Castle has just gone full crypto, scooping up an Ethereum domain name as well as a CHAMS NFT. So another well-known brand has just joined the crypto space, with the restaurant chain White Castle registering an ENS domain name and buying up a buzzy new NFT. And of course, ENS stands for Ethereum Name Service. ENS has been compared to the crypto version of the internet's domain name service, DNS. Like purchasing a domain, White Castle now owns whitecastleofficial.eth address. So a small but significant piece of validation for the Ethereum network. And now that White Castle has this, instead of just a string of numbers and letters, people could now hypothetically send cryptocurrencies to the address whitecastleofficial.eth. Let me know if you do. On the same day, the restaurant's Twitter account also updated its avatar to that of a Seahams NFT, as seen like right here. Very exciting times, and we can check on Etherscan. The address used crypto exchange Coinbase to facilitate most of its transactions. So White Castle used Coinbase to buy Ethereum, and then with that Ethereum, they bought their own ETH domain name as well as an NFT. Pretty cool. Next up, let's talk about Solana. Let's talk about lower cap altcoins. But real quick, I do want to take 60 seconds and give a big shout out to sponsor of the channel, OKCoin. A better way to Bitcoin. Join the fastest growing global cryptocurrency exchange with the lowest fees around. So while this is a global cryptocurrency exchange, they are regulated in the US, which I like. And it's true that they do have much lower fees than other crypto exchanges out there. To understand how that's possible, I will link our 18-minute interview with OKCoin's head of listing. He goes into detail why OKCoin is the better option. Link down below, check it out. And the final two things I'll mention, which I think are important to you, is they not only have the top coins, the most popular coins on their exchange, but they also have newer coins as well as metaverse coins listed on their exchange as well, which I like. And number two, OKCoin also has 100% feeless staking, so you keep 100% of all staking rewards earned. There is a link down below, Altcoin Daily OKCoin, link down below, check it out. And next piece of lower cap altcoin news, decentralized travel site dTravel says it has 250,000 homes available to book using crypto. So dTravel is like a decentralized Airbnb. And what I like is, while some crypto projects launch the coin first, worry about users second, dTravel has the users, they have the homes, and the platform is ready to use. Decentralized home sharing platform dTravel says that customers can use cryptocurrency to book 250,000 homes across the company's global network of 20,000 destinations. And of course, this goes along with the utility of the token. dTravel says potential renters can use the recently launched travel token for payments, travel rewards, governance participation, and other benefits. In a direct quote from the company, "The speed at which we've been able to increase the number of homes on dTravel will be instrumental in accelerating the home sharing economy's transition from Web 2 to Web 3, which, in the case of dTravel, enables both hosts and guests to shape the platform through ownership and governance." All right, that is the update. Love to see the progress. Next piece of quick news for Solana. Solana validators as well as Solana engineers grapple with blockchain slowdown on public call. So the Solana blockchain was again congested, and these major players jumped on a call to discuss. Solana's super fast blockchain slowed to a relative crawl Thursday morning due to a mysterious congestion event that spurred debates about centralization, communication, and transparency at the ecosystem's critical stakeholder, Solana Labs. So what was the problem on Thursday? The problem was simple. A network, Solana, that usually processes over 2,000 transactions per second was stumbling along at speeds below 500. For perspective, still way faster than Ethereum, which processes around 15 transactions per second. And in terms of what caused this slowdown, I'm not sure. That information was not disclosed that I could find at this point. But anyway, validators and engineers jumped on the call and just talked about, what do we need? How can we solve this for the future? Point is, they're talking about it, they're working it out. Next piece of news for Injective Protocol. The Injective Burn auction has launched. Injective will now burn 60% of exchange fees every week, leading to one of the largest token burn ratios in the entire crypto industry, alongside a potentially ultrasound deflationary INJ token. So as we know, Injective is a DeFi hub / decentralized derivatives exchange. And on that exchange, this update is now in effect. Injective protocol will now automatically burn 60% of all exchange fees every week. A new auction interface has also been created for users to track fees collected on Injective, so very transparent. If you're asking why this update went into place, why they added this burn feature, this auction feature, this was approved by the Injective community as part of the canonical mainnet rollout. So this could potentially attract a lot of users to the Injective DEX, derivatives DEX, as well as a lot of users potentially to hold the token if this is now so deflationary. We will see. I will keep you updated. Next piece of low cap news for Symbiosis Finance. Symbiosis Finance is a multi-chain liquidity enabler. Think of them like a Thorchain, but obviously a little different. The news today is they've just added Heco Chain to their public testnet. That's Huobi's chain. And their mainnet for Symbiosis is about to come earlier than you think. So let me just put this into perspective, and I am an investor in this project, but Symbiosis has integrated with Heco Chain, staying true to its vision of connecting to every chain, being multi-chain. Symbiosis Finance has been operating on a range of well-known networks already, including Ethereum, Binance Smart Chain, Polygon, Avalanche, etc., with the latest addition being Heco. So I love to see the progress, and just for context, how is Symbiosis Finance like a Thorchain, only with a bigger focus on liquidity swapping? Well, Symbiosis Finance platform comes with a large range of uniquely enticing options. Firstly, you can swap any token to any token on different blockchains. That's like a Thorchain. But with this, it is possible to move liquidity across different chains instantly as well. So if you believe that the future is cross-chain interoperability, then you probably like this. And why different dApps on different chains would probably like this is because Symbiosis operates on several major networks, and you can build multiple value-added dApps like payment networks, borrowing protocols, and many more that can have that instant cross-chain liquidity. Overall, Symbiosis has emerged as a wholesome and decentralized multi-chain liquidity ecosystem where you can swap any token between all the chains without having to lose custody of your funds. All right, so love to see the